U.S. Treasury Secretary Timothy Geithner meeting with Germany's finance minister and the ECB president today. This as investors wait on the ECB's policy announcement this Thursday. How should you be trading all of it? Gemma Godfrey, head of investment strategy for Brooks Macdonald, joins us now. Her firm has $5.3 billion in assets under management. Gemma, it's good to see you. Thanks so much for coming on today.
Thank you very much.
So thanks to Draghi, expectations are awfully high for later this week. Is he going to deliver?
Well, that's obviously the crucial question, and just tying it in obviously with the Olympics that are on at the moment. Like the Olympics, we've heard all the hype, and now is the time for him to deliver, because he's come out and he said he'll do anything possible to support the euro. But the thing that investors are very concerned about is that if all he does is to reactivate bond purchasing, the markets are going to be disappointed, because as we've seen, central bank action is no longer able to support the markets. And we've seen this, stimulus at one point in time when they didn't put stimulus into the markets, Spanish yields would fall, and now we're seeing Spanish yields back up to elevated levels. So this is what investors are very concerned about. Can Draghi deliver? Well,
surely he must know, based on the way that he spoke last week, of what the markets are expecting, right?
He knows that he needs to deliver more than has previously been delivered, but there are three hurdles in this kind of road to recovery, and that's, first of all, we need to see more fiscal unity. And that's going to be very crucial. We need to see more reform to make sure that we get more competitiveness coming back. And finally, more funds to be able to contain the crisis. Now, will he be able to deliver on all 3 points? And it's very unlikely.
So where would you be playing the market right now, given the uncertainty, not only with what the ECB does, but frankly, now no one really knows what the Fed's going to do based on the most recent GDP read, which was obviously bad, but perhaps not bad enough. And then we're also ahead of the big jobs number at the end of the week.
That trade has been very interesting, the US versus Europe. So a lot of fund managers out there have been overweight US equities and underweight European equities. And it does look like that trade might be starting to look stretched. And that's what people are looking at. When will be the time to actually move out of US equities and back into European? Because obviously, a lot of companies out there are international, they've got strong management, strong balance sheets, and they have been punished, and they're starting to look cheap. But obviously the question is, could cheap get cheaper? And there are still a hell of a lot of risks on the horizon that are causing investors to potentially just wait a bit longer for that clarity to come back. And once we do get more clarity, then they'll be able to know exactly how to reallocate their assets.
Stephanie?
So Gemma, do you want to own U.S. companies that have exposure to Europe, or do you want to own the European companies?
It's more important to note where the end demand is coming from, how these companies are generating their revenues, as opposed to where they're headquartered. So I agree, if it's a company that is selling all their products into Europe and is relying heavily on European demand, well, with unemployment at obviously historically high levels and consumer confidence so low, that is a dangerous strategy. Whereas if it's a company that might be a little bit more exposed, as I said, with respect to headquarters, but actually selling more into emerging markets or into pockets where the demand's more protected, that will be a better strategy going forward. But again, that's more on a case-by-case basis when you're looking within the stock markets.
Hey, Gemma, real quick, is there a solution? Regardless of what happens, doesn't Europe look at the next 5 to 10 years of, at best, a recession?
Things are definitely going to be tough, and this is why it's crux time at the moment. People are talking about, is Greece going to exit, or are they going to move towards more fiscal unity? And that's going to be able to determine the outlook of for European growth going forward. Are we going to maintain this union between certain countries that are going to continue to drag down the core, or is there going to be some form of split and some form of realignment to enable growth to resume?
I'm going to play off the fact that you're a physicist and ask you whether you think that Draghi makes a quantum leap and actually does deliver what the markets want.
There is a lot of room at the moment for disappointment, because, there's a lot of room for disappointment.
All right. It's good to have you on the show. Look forward to having you back, Gemma. Thanks so much. Gemma
Can't even spell physicist. Can you spell? It's a tough one. A lot of Y's and S's and I's.
I wouldn't put you on the spot.
Yeah, well, you can try.